Hello. Welcome to the show. Quick market update from myself, Tradespotting. This is SPY, as you can see, 433.80 on the close, 434 post market, 0.91% up on the day. 6 select sectors also in the green, with the biggest mover being tech, up 2.17%. VIX also back above 15, up 8.53%. So a little bit of chocolate on your biscuit there. If you're looking at SPY topside, you're probably aware of its recent moves down from the peak. This was the ridiculously strong supply line on this trend down. Trend being down, lower highs, lower lows. And this supply line was obviously broken subsequent to the lows coming in. October 22nd low, double bottom, price action then started going up. This would be supply to this trend to the top side. Demand. So this was dominating that downward sloping trend. That'd be the resistance line, and that characteristic on the uptrend is underneath. Price action continues unabated. The important thing to look to when you broke this downward sloping resistance was to see how price action performed at previous peaks along this linear trend to the top side, and all the important tests of this trend line don't actually originate on this trend line itself, but instead they actually come subsequent to price reaching prior highs, right? Like when price reaches a prior high, then you get a test of that trend line, see? Right, and we've also just reached this one, but not yet had a test of that trend line, you see? This guy. So that's what a lot of people are waiting for. And along the route to it, there's intermediate stops that would be very important to hold at 426, 424, and 421. A little bit of a gap in there. But price action has been performing very well. What you would look to then is this guy, and you can see you're above it. That's cool. We like that. Next one to aim for is this guy. That's 786 retracement. And then this guy, that's also an 886 retracement, which are marked out with this green box. Below, you've got your red box. That's the test of the trend line. There's also a gap in there. So the question is, when does it test this trend line? Because it'll test it at some point. Everything reverts to the mean at some point. So it could be up here. It could be down here. It can't be back here because it's already in the past. But at any stage, this thing could come down and test that trend line. Obviously, that trend line is moving to the top side, so factor that into your plans. Looking left, you've break this guy. Do you want the next one and the one above, or do you test it first? And the question of which comes first, then you find down here on this indicator, which measures our momentum. And you can see this downward sloping trend line here. We would have been looking at reactions on the bottom side if we're talking about the equivalent of this move to the top side and the reactions on the top side, including this one most recently here, right? That's question mark. So if we're looking for that equivalent, then we're talking about these tests before subsequent returns to that trend line as identified on the top side of this indicator as to the bottom. So this was us looking at the bottom for these reactions. Now we're going to look at the top side for these reactions, right? You with me? Hit the like button. And you can see then here, obviously price peaked twice. And what happened at those times? Obviously you were in this zone on RSI. Similarly here, price action again before you came down to do the test. In here, and where was that, right? It was in this zone, which you're at right now. And you can mark that off with a horizontal. This was this guy's peak, this was this one's peak, and they two matched up. This also third touch of it, but this time having touched it once, you've come back and you're in the bullish control zone and pushing to the top side. So you're not bearishly divergent. Price is ahead of these previous highs, and so is the RSI, apart from this guy. So does it come in and match that guy? That is still the equivalent horizontal level to break that we've already broken here. So now our question, we can narrow it down, right? We're saying what comes first. Well, what comes first now is on those important factors we've marked out as being relevant to the next direction in price action. Okay, so the way you do that is you mark out this horizontal peak and you say, which comes first, a test of that horizontal or this horizontal? Yeah, you see? And if you are to push higher here and not exceed price action's previous peak, we've already done that, so you won't be putting in divergence in that sense. And if the price action itself goes higher but the momentum indicator doesn't, then there would be that kind of divergence. But with it being so strong, price action can continue, RSI can continue, and you could likely see you meet your previous peak in price action ahead of this guy as you go up, touch the top of overbought, top side of the bullish control zone. And if it is that people are expecting price action to break down completely and for this to be a real high and that to be a lower high in a macro sense than this guy, right? In which case they'd be looking for, subsequent to this high was a low, and then this high they'd want a lower high, right? And then a lower low, which would be lower, right? That's what they'd be looking for if they think that we're peaking right now in that similar way that we did back here, right? But when you did that back here, that was a bearishly divergent high, i.e. the RSI peak beforehand outdid price action, second time didn't. And then you're looking across here and you're saying, well, you don't have anything like that on the go at the minute. And when it did actually break down, the peak beforehand was way up in the overbought beyond bullish control zone, and you haven't got that yet. So you could easily go on and, having broken the horizontal, it now looks like it wants to try to the top side before it comes back down and finds support on this trend line, wherever that might be. So then the question becomes, where might that be? Which is also when, because this is the chart, and that's how the x-axis works. And you would extend it on because it's linear at the minute. Sure, it's been broken, right? But that's not what we're using it for. It's integrity. We're using it for this test. Actually, also confluent with the 200 period moving average on the 4 hour. When you go to the daily time frame, you've got that 50 simple following it up. Turn off the drawing so it shows up. There you go, right? The blue one. So this is the idea here, price action moving into this zone, which now that we've marked out the probabilities, we can also then draw on where that probability is, right? This is us worshipping the geometry of price. And in here, we've got the zone, the danger zone, danger zone. This is where you get real tests of the trend, right? Real tests of the trend come in there. Nice, isn't it? Natural trend. And I could draw other pictures to make that joke better, but it'll do as it is. So price action, moving into this zone where we can expect a lot of volatility and a lot of people being liquidated, which will be fun. Also, everyone caught with their pants down. You'll be caught with your pants down up here. You'll be caught with your pants down here. You'll be caught with your pants down here. You'll be caught with your pants down here. And then the 7 or 8 times it does it when everyone thinks it's already over, they'll all be caught with their pants down. Boom, boom, boom. And it's after it price breaks out of this zone that you'll get a very strong reaction. I say this zone and I mark that out as a square because it could also break below that line. And if it was going to do so, I don't think it would exceed this 236. So unless it's already had a bounce. And if it was to have a bounce, let's show you why I drew that as a square and not just a natural, right? Like the natural, sure, here's the natural, price action has to make its decision, but it'll also come within this bit because that second triangle, you've got your 236. Oops, just giving the game away, Rocket Outcrop Flasher. You've got your 236 in here, so if prices, to say, fall out and break this linear trend, then it'll come down and test a 236 and it'll probably bounce, right? Because this is an uptrend and it's broken the previous highs, and that would be in line with just another one where you broke out before previously, like see how you broke out here, and you also exceeded it at the start of the trend. So there's enough wiggle room for you to come down, test that 236 and bounce. You can also above the 200 period moving average here on the daily time frame, so it doesn't even have to happen immediately and you'd likely get a bounce there. So even if it did break the 236, you've got another reason to support. But in the first instance, it would bounce and then you'd find resistance again at that diagonal trend, and potentially that would come in at that horizontal level of resistance that you departed from in order to make the test. So you have a decision zone, and then you have, if it breaks down, a confirmation zone. And then above, you've also got this zone with a second target, which you can take as confirmation of a bullishness in price action, because this is the important horizontal. You break above here, fantastic. That's the next target. You get above that, then it's only the preak you're looking to, 475 and onwards. And that, ladies and gentlemen, is how you exit a bear market with your trades intact. So a little bit of look at VIX then. As I say, 15. Not managed to completely recover that channel, though it would be an obvious place to target. Price action doing so well so far to get there. That's not what I wanted. I needed to grab that guy. But ankles? Grab you. So testing that, being typical, price action falling out of that channel and then failing to get back in again after a retest, would also be failing to get back above this previous level of support, therefore now resistance, and price action dropping back down. 1618 would be an extension of this move down to 1320. 1618 the previous move down to 1184. And horizontals to look to below 1180 is 10 and 8. If you were going there, SPY would be moving big moves. Right, so if it is making big moves, that'll be that tech. There's XLK. And very good trades we talked about. Price action continues to the top side. This is the biggest mover across the board this year, tech, select sector. And as you can see, while other stocks are just recovering the bullish thesis, having retraced, 20% since their low, 50% since the high to the low retracement, you can see that tech would only needed to be at 150 select sector, and it's closed today at 169. It looks bears with a post market at 170, so it'll be exceeding its all-time high of about 174, and it's at 170 post market today. So is it a bull market? Well, these things are putting in new all-time highs, and it's tech. So there's that to look to. Bitcoin 25,909, not managing to break any of these crucial important levels yet. Sure, downward sloping formation, but while a lot of people panic, right, there's this support line, there's the fact that price action does typically make these kind of retracements within this trend it's in at the minute. All that is completely and utterly everything that's happening, nothing distinctly different yet. And there's 200 period moving average, most actually retest. Similar situation here with an important fib level as well. If Bitcoin does manage to break up from here, and it's not going to completely collapse if SPY's going up, then you've got a 50 simple retest at 27.1. If it gets back above 27.1 from here, it'll just start pushing back up, and you'll see it test these previous highs of tech and SPY's going up, which is good news for a lot of people who watch the show. And if you do watch this show, you'll absolutely love the Rocky Outcrop show. It's also on YouTube, www.youtube.com/Rocky Outcrop. And tomorrow, Tuesday, that doesn't happen, Wednesday podcast hosted by Sarah Rara. Get involved with the community podcast. You'll love it. It's great fun. Check it out. Wednesday. That reminds me, actually, have I got this Mr. Sputter? I have to borrow this. Boom. There we go. Job done. Right. How's the chat box? Bullish for GMWowie. Yeah, GME had a good day. Luke Nacho. Where is he? Where is who? Where is who? Who's where? Who's where? Where is who? Let's go back to the start. Who's here? Merrick. Great to see you. Beat buckets. KT. Rich. Merrick. Luke. Lurking Luke. How you doing, Luke? Kitties. Homeless Ghost. Freethinker McJones, good to see you, Stu. Yo, Luke. Yo, Jumping Jabberwocky. How's it going, our fella? Stunning, isn't it? Oh, damn, another milestone. 23 months. 23 months. Holy sugars. Well, we've got a few in the leading pack, isn't it? The peloton setting the pace. 23 months, 24 months, that sort of thing. Freaking Ellie. 23 months. Plus, I've known you for years and years and years. Jumper Jabberwocky. Our formative years were spent in the same small town. A cheeky look at GME, Velociraptor. A cheeky wee cheeky look at the GMEs. Wee cheeky looky cheeky. Wee cheeky look at GME. Where are you, GME? You're on my stocks I actually own list. Where is GME? There you are. It's bloom. Wow, done a lot of fancy artwork on this recently. Strong move on the momentum. Strong move on price action testing that 200 period moving average, and then boom onto down sloping diagonal resistance. This is itsy bitsy tiny whiny time frames. This is the move up. It's again left the gap. Breakout move to the top side. This was at horizontal level. Came up and tested it a couple of times. Didn't manage to come back, find support. Boom. It's going to break up. Strong move. Don't need to see it on the 15-second time frame. I suppose we've got the regular hours on. You're not going to even see all that much. Extended. Oops. So a cheeky wee look at GameStop. You can see that this section of the trend, you might worry about the divergence there, but like I wouldn't be worrying about any problems on the support line, which, you know, it's an uptrend, and so Tradespotting, if I'm only going to have one line, it'll be that one, and so I'm not worried about that. And then sure, you don't have quite as violent an uptrend with regards to the lows on the momentum indicator, but that's like because it retraces so much, but price action doesn't, you know, and so that's like the momentum pulling it down, like really trying, and they don't manage to pull it up, like down, as much as those people who are pushing it up, and they're not trying that hard. So, you know, it takes more effort to push price down than it does to push it up. Then it's going to go up, right? Because who likes effort? Nobody. So yeah, that's good. We'll have another one of those, please. So what's my cheeky look saying? Well, I'm not inspired by the momentum, that's for sure. 15-minute time frame. You've got your flash down 21.47. That's a 236 retracement back all the way down again, which will be an 886 when that matches up. It'll probably go spring down. Ergody. What would that might look like then? Well, you could go on up. Can you get a 34 out of this? And a 1618 extension? Oh my goodness, you probably would. That'd be nice then. That happens. This has to recover though. For that to happen, this has to go back above 26 and change. And so a quick look, I'm thinking, what's the 1 hour saying? Is this 50 simples now below the 200 period moving average, which is distinctly different from when we were at this push up, which reached 29, 28 and change. From then, you had your 50 simple above the 200, and that persisted all the way through this trend. And that's not the case anymore. So, not great. Price action didn't find much resistance at the 50 simple or again at the 200, but it has definitively stopped here at that downward sloping diagonal. And now you're putting in another test. It's also a golden pocket retracement, as you can see. So that's where you would look to go through a 236. And having fallen out of this mostly post-market, right, between those two lines, I just drew regular trading hours, stretch out, and you'll see that big gap for yourselves. You are all well aware of it, sure. Yes, are all. It's yourself, Velociraptor. So really you're looking at this gap here, right? So there was low liquidity here because obviously price traded away from that gap, created it away from that departure point post-market. So there was this big liquidity gap in here, and then when price got back inside that gap, which was the area to get back above 236, and then inside that gap has to find by this horizontal line, then it was probably going to go to the top side of it and fill the gap. That's what most gaps do within 2 hours, if not within 2 days, and then if not, we'll have a look at it when the trend starts going that direction, because it clearly isn't if it didn't do it in that amount of time. So this is what you're looking at here, and it's made it towards the top side of that. Hasn't completely and utterly closed it yet, I don't think, though. Which would be touching, well, I mean, yeah, it's not 25.75, and that would be an 886 retracement, 25.74. It may well be that's where price action's going then to fill that gap, and then test this 886 at 25.74, and that's if it breaks this resistance, which is top side of a golden pocket and a downward sloping diagonal. Note when that's happening, well, 50 simple is above the 200 here on the regular hours, so nothing to worry about there. There's a 1 hour though. So it's yeah. So really, what you're looking for is to break 24 and 50, and then sure you've got 25, but you're looking to break 25.74, and that's going to be very, very, very difficult, right? It's going to be incredibly difficult, right? So if you've did buy it somewhere in and around here, and you didn't add to any of these places here, then just because price action has gone from these lows back up again doesn't mean that when it gets to 25.74 you can relax and this is now a good buy again and everything's fantastic, because the probability is that it falls down from that level much higher than it does in the middle of like between the golden pocket and 786 total no man's land. So it's probably, if it does break where it is here, right, which is the post market, it's not up, right, and a lot of things are, then it's looking at 25.03 or $25, and then 25.74, where the probability is that it actually does like find a lot of resistance because it's a gap. It's what was support now, like not any longer. See, drag this guy out. Wow, right? See, underneath price action there, it's low. Most recently, it's like pretty much coming back to test everything about the breakdown, which is the gap, the 886, the horizontal and the diagonal, and even when you put on the extra hours, all the moving average crosses. So it's testing everything at this moment and asking it to, from the very first go to get back above there, it's asking for loads, right? If you did get it, it would be displacement within the trend, and you'd come back in and fill in this previous formation, continue it in a linear fashion. But again, you're asking a lot of price action, and I'm not asking that of price action at all. Anyway, so this was a good place to sell covered calls. As we said, this was a good place to buy them back, as we said. And subsequently, price action making a lot of people a lot of money just doing what we predicted it might do. I do think that if it does manage to break these downward sloping diagonals, these horizontals, and perform adequately in these tests, then you'll see it push back up again, and the next high will be $34, having tested 28.29. So, boom, up around here. As long as you get through all the extensions, which at the moment it looks like price action has to push higher and then get a retest. So if you got a very bullish scenario, would be it doesn't necessarily go straight there, because then it asks the question about lots of retests along the way. If it does actually bounce down and hold a 50% retracement and then go on, that'd be better. And then subsequent to getting here, it actually counterintuitively would be better if it came back and caught this previous resistance, now support, and then pushed up to an extension, previously 1.13, you'd be back inside this and be performing that displacement, and then you'd be looking at tests of 1.14, just the test of that, followed by continuation of that formation, that channel. So you'd be looking at tests probably like floating up at the bottom side of that line, break to the top side, support. Anywho, that's all speculating on stuff that's dangerous. The thing to look to right now, if you're trading GME, is whether or not it managed to conquer this downward sloping resistance here, which is at right now at 24.50, that sort of level. If so, great. Got the targets above and below. 200 period moving average is the target below if you don't have them. That doesn't hold, it's the level you're breaking back into the gap, $22. That doesn't hold, it's the prior low, 20. That doesn't hold, it'll go down 18. And that is a quick look at a GameStop. Boom. Top notch buy analysis. Thank you very much. Look, take a look at Jimmy. Didn't even know XLK was a thing. Why was I missing with TQQQ lol? Because you've not watched for long enough, Stu. You've not watched for long enough, Stu. Colin Bing Bong. Kitties. Emmanuel Del Galadilio. Del Galadilio. Hey. Hello, everybody, and good evening. Hello, everybody, and good evening. You're a gentleman. How are you doing, Stally? Beautiful, thank you. You're welcome, Velociraptor. You're welcome. Thank me by becoming a channel member. Excellent, GMETA2. What a legend. Thank you very much, Luke. Thank you very much, everybody, for being here, taking part, hitting the like button, supporting the show. Thank you very much. Up the fan funding button. Jumper Jabberwocky, 23 months, another milestone. One for you, one for me. One for you, one for me. Woomph. Get this up. My recent events. Boom. What about higher and lower on Friday? It was brilliant. 10 minutes ago. Kitties. It's yourself again, kitties. You're so generous, you lovely chap, ya. Jimmy, how about some more CVNA and GMEOE? Well, we got some GMEOE, but you want some Carvana? So you broke up from 18, good. What was your target there? Fantastic. Get the 4 hour up. None of this messing around. Right, so you held that support level, 1480. You got your gap. Golden pocket retracement here. Through that. Turned off the 786. Remember I turned off the 786 anyway, so you got your 786 retracement over there. 26 bucks was the high. We'll chunk off of that afterwards. Still 11.48% today. Bullish control zone. I wouldn't worry too much about the oversold there. That's what it does when it peaks. 2 touches in such proximity. Not divergent. Not bad. Doesn't mean it's everything happened though. So that's very busy, isn't it? Drawings off. Jumping Jar Walk, $20. GME's quick look is everyone else's PhD. Hey, thank you very much. Jumper Jabberwocky with £20. So, you know, most countries that's worth like staggering amounts now, thanks to a fantastic economy here in Britain. And then hits himself with the 23 months. So it's really his show. You know, it's really his show. Thank you very much, Jumping Jabberwocky. So this is kind of Ryan, a 4 hour time frame. I wasn't listing this up, like getting this up for the flash, but it's there at 448. These price action here, right? It's not definitively breaking out of this area. I know that it's 25% higher, but the momentum indicator isn't saying it's pulling away or putting in anything crazy different, and price action isn't significantly higher relative to the overall trend, which is quite dramatically down, obviously. So yes, Carvana most recently putting in a high higher than its previous high, lows higher than the previous lows. So I suppose I could just turn off the drawings and then do them again because they're not all that complicated. Yes, we'll go with that. Yes. Yes, so you have this retracement happening against the trend. Managed to make it above 382 and not much further. That's a bit weak. If you are to look at it in terms of where would it be bad to break down from, you don't want to see it. Like, so you want to see it hold 17 while it goes on its route to 37. That's the question Carvana is asking of us. On the weekly time frame, still looks like it could call that an uptrend. Recovered to 50 simple. And the next peak, 40, 37, not all that far off. And then 56, 57. That is quite a big distance away from both of them. So let's be realistic. There is no other peak on price action to look to. And you have exceeded this guy. So the question still is this thing going to break up 100% from here? Or is it going to come back down, fill a gap, test the 200 period moving average where a 50 simple is approaching it, and typically that would get tested. It could even do most of that and not dip below its prior high, and any sort of a reasonable retracement would come no further than the prior high. So you could see it in at around 13 and change, fill in all these gaps, testing that artifact, and then break up again. And it wouldn't be completely unnatural to see something like that happen. Weekly W continuation divergence, if you were to push there, maybe not. Maybe not, probably though. You'd have to put in a real breakout. I mean, even, the thing is, right, that this is the way this is behaving. If it is going to 47 or whatever that is, let's call it 40. If it is going to 40, then it's probably going to 57. And if it is going to 57, then it's probably actually going to 130. The reason that it might not is because it could break down at that peak. It's also an 886, so like 42, 24, 45 bucks. Is it going there now though? It's already done so much and made so much money for people. Is it really going to do that? You've also got this downward sloping resistance. Like you typically would test that, you know what I'm saying, about support become resistance and whatnot. So resistance becomes support. It's horizontal, diagonal, it's all the same, especially from breakout trade. And if it managed to do that and put in what is like also in line with higher lows and continuation of that, that would be the uptrend. That'd be very good. So, you know, test of that not completely and utterly out of the question. I'm not close. Like, you are trending to the top side, so I'm not looking at that 4 hour flash as a target yet. And it didn't fill this gap before putting in quite extreme moves, so it doesn't necessarily have to do the same here. As you can see, right, and this is the same with every gap, if you move away from it, come back and test the top side of it and move on and exceed the prior high without filling the gap, then you can forget about that gap for the time being, right? So, and especially if that all happens on a 15-second time frame when you're trading SPY and it's got a gap and you're wondering how to do it, that's the way to do it. Hits pause, rewind, and play that a million times over, right? So, same thing happened here. Like, it test the top side of that gap. Great, right? Now, it's still perfectly aware that it's there. But if price action to go up and exceed that previous high, it will not care about that gap, right? The question is then, how does it react to retest of that area? Like, how does this react to test of that area? Right? It will bounce down, but held the support all the way through. Didn't get into the gap. Resistance, and then once it found resistance, it didn't come back to support. Well, straight up again. So that's the same sort of thing you'll probably see here, like resistance, and then doesn't come back to support. Well, it'll just smash up again. You'll get your 45 and whatnot. But asking for a lot. Also, it would probably be best if this thing held the center line, recovered its whole moving average, because this is quite violent price action with those gaps. And, you know, the more of them it puts in, it's like Swiss cheese. It's like Swiss cheese. Finch. Right, so, yeah, I mean, we did all this. You want to hold 17. I can draw it again. You want to hold 17, yo. You want to hold 1922 now, do you? No, you want to hold 17. It's the gap. I can't remember what I was saying earlier. Maybe I drew it from lower. I don't think they're out of the woods with the financials yet. Oh, Kerrysdale are short, are they? Kerrysdale should just stick to making butter. They make the goldest, beautifulest, most smoothest butter going. But now they're out shorting stocks and writing about it and talking about it. Like, if it was such a good trade, why would you need to write about it in Investor Place? As if there is such a place. What a stupid name, eh? Bet you no investors go to Investor Place. I bet you they've never been, ever. It's like, you know that place the Russians are calling Bradley Square? It's like got one Bradley in it. So they're like, it's Bradley Square. It's like, nah, that's the exception. It proves the rule. It's like, not Bradley Square. It's the same with this. It's like, stick to making butter. Anyway, so this is this is a serious show for traders. This is a serious show. Serious show. Thank you very much, Jumper Jabberwocky. How you doing, my friend? And Kitties, thank you very much, Kitties. So we're looking at Carvana and it's risk on, and if you're already in it, congratulations. If it breaks below the center line RSI, it wouldn't be too fantastic on the 1 hour time frame. 30 minutes, I mean, this is where it's doing all its stuff. You've got a flashback at 11:44. A retest of that area would be taking you below the peaks. We were speaking about how you don't want to really go below these previous peaks in price action when you push up again, you know, which you'd have to do in order to get to that flash. You'd also be below the 50 simple and the 200 period moving average, and tests of those two would be very revealing. Does it look like you're going to get another test of that? Well, I mean, this is quite a strong reaction, RSI, back above your own moving average, back above center line, not too bad. It's like not much to be taken from these things in that they always goes overbought because it's always got short interest on it as well. What is the short interest in this at the minute? Probably have to look up, but if it's above 25%, this thing tends to benefit from that level of short interest. What do you want? A 4 hour time frame, there's still that flash, but you know, you've exceeded these, you're in an uptrend, you're looking at stupidly high targets. It's just stupidly high. It's just so stupidly high. You have to be already in it and follow it with a stop. I mean, other than that, what would I do? I'd probably just go like, yeah, I'd be like that, and I'd probably have that chart up on the 4 hour time frame. I'd be saying, oops, there it is. I'd be saying, well, as you know, break 27, very excited. Break 27, very excited. And I'd be saying, break where you are now, $20. Yeah, break $21. I'd be less excited, right? I'd be anticipating a test of 17 and change. And that's where important information comes in. So, I mean, it's because of the nature of this thing, right? It could easily fall back down to that area and it wouldn't be a big deal. And that's also the open there, so no big deal, right? But test the 200 period moving average there on the 15-minute time frame. That's something that happens all the time. And then, so, you know, it being here, that being needing a test or something, if it broke that 50 simple, that probably happen. And if it does break to the top side, I don't think getting back to that high would be enough. I think you'd need to beat 27 and change. And you'd need to do it with a strong push into the bullish control zone, possibly overbought, and persisting in there for a period of time, you know, a day at least. Preferably open, close, open on the 4-hour time frame. So yeah, those targets. You break 27, that's it. You break 17, that's it. That's $10. And price action closer to the bottom than the top. So I'd be a little bit cautious there. Stally, 19 months. Thanks for the show, Jimmy. Great stuff. Thank you very much. It is 22:01 in the morning. But we still got the energy and the great information. No time to take a break. Speaking so fast, you have to also put in your Scottish translation device so that you can understand what I'm saying. The humble mumble from the east. Boom. So, these are the charts, and those are the moves that are coming up, probably. Managing my risk around them. It's about anticipating, you know, the strength of the smaller moves, so you see if they're able to test those support and resistance on the higher time frames, or if that's not going to be possible under that level of strength in that particular type of environment. You see, you've got your over sold here. You do tend to fall away from that zone very quickly if you're putting in any type of divergence at the same time. Like here, you obviously were going up after this, and then when you fell out of the bullish control zone, price action dropped off a cliff. Like similar situation here. Price action. RSI there actually didn't really. You got class B bearish divergence. Anyway, it was still all about falling out of the bullish control zone. Did that and then boom, down again. Didn't manage to get back in again. This thing you didn't even get overbought. And here's like where you've got your clearest example of it again. It's just at this stage you haven't yet put in any sort of a bearish divergent peak. So it could well be that if tomorrow you push back down again and hold support on SPY, and I say support on the very small time frames in it around that 50 simple or in it around 429, that open, then well, you might close a little bit of a gap or whatever, but you'll still be going sideways, and you'll be looking for perhaps a bearishly divergent peak on price action where the RSI doesn't give you the same signature. And then if that happens, I'd be very cautious of price falling down and taking the RSI with it outside of the bullish control zone, because if that did happen, you know, like I say, right, it may well be that you're getting that test of reversion to the mean at that point. You know how it is the distribution of price and any probability, right, and the bell curve and all the rest of it, and the return to the mean, and what the mean is, and why that's not magic, but it's in fact obvious. It's a little bit tautological even saying it to some people. Hearing it, it's like pointing like, is this observational comedy? Where are we? It's like a jazz club in New York, but the customers are really low on a Thursday, so we decided to improvise, and it's like, yeah, improvisation, jazz club, cha-cha. Welcome to Tradespotting. Boom. What a nice show. Hit the like button. Boom. Nice. See you tomorrow.